I'm Tang, joined today by Charlotte Chong and Nadia Hassan. So now, companies in the news. So today, Charlotte, we have Lingakaran Trans Kota Holdings Bhd or Litrak. So it actually made the news because there'll be a new toll rate or toll hike for the LDP highway. It used to be RM1.60, now it's RM2.10.
I'm actually not happy with this news, seriously. Because if I go to KL for assignment, I'll have to pay extra RM3. What about you?
So myself as well. So I think this goes beyond just us passengers, right? I think even in logistics companies, they will be affected as well.
Correct. Logistics company, when I look at shares from GDX Express, Century Logistics and Tasco Bhd, all of their shares actually plunged today because of this news.
Right, so UOB Kehian actually in a report today said that this announcement came as a surprise because he said that earlier news reports suggest that the government will actually put on hold its decision to raise toll rates because of rising cost of living with GST and everything else. So it's actually slightly negative on announcement because it said that it may negatively impact traffic numbers, and this will actually consequently impact revenues and earnings for the next 3 to 6 months.
However, MIDF actually, they are quite optimistic with this deal. I mean, the toll rate hike. And they actually maintain a buy call with higher TP of 5.84 ringgit. And what MIDF said is for the LDP highway, the revenue received by Litrak is unchanged as they only reduced the compensation paid by the government to Litrak by 90 million ringgit. And when we look at motorists previously paid RM1.60 for LDP highway, the rate that took effect since 2007 per the concession is 210. Where the 50-cent difference was borne by the government since then.
I think it's also positive because it says that Litrak will actually now receive the full amount upfront in cash instead of actually applying and going through lengthy audits for the compensation payment, which is actually a lot of red tape going right there. But it also says that it's highly beneficial for the 50% owned Sprint Highway. Now, Litrak actually owns 50% in Sprint, so it says that the increase for the Sprint Highway will also contribute positively to Sprint earnings, and that's why MIDF has actually upped its target price to RM5.84.
Now, the latest round of toll rate hike will see a further 43% average in all highways. This means that published rates for motorists will go up by an average of 72% since end 2014.
Now, Charlotte, actually, when you look at all these toll rates increase, right? Yesterday we saw Ecovest and Silk Holdings as well with Duke Highway and also all these highways. I mean, on one perspective, you're looking from the highway concessionaires, but on the other hand, you're looking at the consumers like us who are impacted. So I don't know, you don't quite like it.
I mean, like I said just now, if I go to an assignment in KL a day, I'll have to pay extra RM3 to RM6, the range. Everything has been going up. All the prices have been going up. And also, after we saw the toll rate hike, which is going to happen this Friday, everything will go up further again by the next, by the next few weeks.
But I mean, it's bound to happen, right? I mean, so UOB actually said that with this toll rate hike, it will actually result in the compensation element being removed because as previously the government has been compensating concessionaires, or actually the difference between the toll collected as well as the agreed upon. So, but I mean, nonetheless, I mean, UOB actually remains bullish actually on the construction sector. So now, Nadia now will bring us Insider Asia Stock of the Day. So so today we have United Malacca Bhd.
Yes. But just to answer your earlier question, I have to pay for more dollars. That's never...
Every day?
Every day.
Wow.
Going to work because I live somewhere near KL. But anyway, yes, on happier note, we're looking at United Malacca Bhd. It's Insider Asia Stock of the Day. It's a plantation company. No surprise. It's actually the first one, apparently, they said to look at because it's very low profile. And you know why it's actually very low profile, guys? It's really old. It's an oldie but a goodie. It started all the way back in 1910.
That's like how many years ago? 100?
I can't do math that quick. You think about it while I tell you about what else they like. So basically, the profits, of course, are derived from selling CPO. It is considered an upstream plantation company. And the other one that they really like is the fundamentals and the young tree profile. I mean, for them, that was actually the big selling point. It does stand to benefit from the recent CPO rally that we saw recently. But the stock's actually down about 11.6% over, year on year. This, which they think provides a good entry for you to come in, because the stock actually, if you look at the price, is RM5.93, which I think maybe for some people might be a little bit stiff. I saw you make a face. I saw you make a face. I'm like, I know it's a little bit stiff. It's already down to 279, but look, fundamentally solid. I'm not surprised that when I opened the balance sheet, what I saw was zero borrowings and a lot of cash.
Insider Asia loves this kind of stock.
Exactly. So it's very, very classic for them. And the company does seem to be actually doing other stuff. They're building some other mills. They're doing a new oil mill to be built in the Milian Labu estate. Capacity of 40 tons. The new oil mill will be completed in 2016, which I'm hesitant to remind you is only 2.5 months away, by the way, so it's a bit freaky to figure out that the year's gone so fast. It's 57 million, which is all going to be done by internal funds. And they actually really seem to just be buckling their heads down and doing it, regardless of what you think of how CPO is going to do. But when I look at the story, I do believe the company is really oldie but a goodie. But I looked at all the news, right? James Fry, Mr. Leading CPO expert, has said that it expects CPO to be about 2,484 at the moment, because they think by the first quarter of next year due to the tighter conditions. More interestingly though, I don't know if you saw this news, Malaysia and Indonesia, who together produce about 85% of the world CPO, have decided to make this Council of Palm Oil Producing Countries, or CPOC. I don't know, when you saw this, I saw an opinion piece in Jakarta Post where basically they think it's a cartel. Is it an OPEC? I'm not sure either, but I think they say it's actually for the good relations between the two countries, which is nice if they can stop slashing and burning and giving us haze.
It's like another TPPA.
Yeah.
Well, it sounds like that to me.
I think there's so many of these deals in the world. I just want to see how, if we could just sort of draw a web and look how it looks like. So back to United Malacca, very solid fundamentals. Would you expect anything less? But just to wrap things all up for them, yes, they're a plantation company. What Insider Asia likes about them is the fact that they actually have a very young age profile for their trees. And also the other thing is that the share price has actually lost about 11.6% since last year, and that gives you an opening for things to do. So back to you guys.
Young age profile actually helps a lot in plantation companies. Thanks, Nadia. But that's all we have for today. I'm Lynn Tang, joined by Charlotte Chong and Nadia Hassan. For more, please go to www.ahmarkets.com. That's all from us. Thank you and good night.